Good morning, students. A very good morning from my side. I'm C. Ankit Sharma, your income tax faculty for upcoming 5 sessions. That is regarding the PGBP. That is regarding profit and gains of business and profession. So we will complete this topic in our next 5 sessions, including this one, of course. Before this, we have completed our salary and income from house property provisions. And I believe that you all are studying very hard to become a chartered accountant as soon as possible and to be the part of this beautiful fraternity what we are. So before starting the class, there are good morning wishes from everyone. So good morning, Suprabhat, Namaskar, Vanakkam, Kem Cho, Sat Sri Akal, Subha Bakhair, Kasakai, etc. etc. So let's get started. Today we will be discussing the provision regarding PGBP, which will consist that how to compute or calculate the profit or the surplus from a business or a profession. So it's a very important topic out of all the numerical topics we have. We have 5 heads of income. Before this, we have completed salary, house property. PGBP is our third head of income. After that, there will be capital gain and income from other source. And in my opinion, out of these 5 heads, the PGBP is technically and practically one of the most important head of income in your academic as well as in your professional life also. Because in this head, we will understand how to compute profit of a business or a profession. So Tunishka is good morning. Okay, and she's asking a doubt also with her good morning wishes. In illustration number 9 of income from house property, she's asking, in illustration number 9 of income from house property, why 1/5 PPI is not calculated? Okay, let me see. What is the illustration number 9 of income from house property? Prem owns a house in Madras. Okay. Tunishka, you can see in this illustration, there is no interest rate has been given regarding the loan. Again, in the 5th line of the question, it says a loan of 25 lakh was taken by him during the year 2019 for acquiring the property. So, because there is no rate of interest, because there is no date specified, so we cannot able to find out the pre-construction period because we need the rate of interest and the date of loan taken. But you can see one more thing in this. There is technically no pre-construction because he just purchased the property. He does not constructed it. You can see that it has been written in the question that he took a loan of 25 lakh rupees for acquiring the property. So he just purchased a constructed property. That's why maybe the rate of interest and the date of loan has not been given. So we are technically not able to find out the pre-construction period in this question. So interest cannot be calculated. I hope it's clear. Next is what are inadmissible deduction? It is given in study material on page 3.164. Inadmissible meaning, which means disallowed, which is not admissible, which is not allowed. That is called inadmissible deduction. Under income from house property, there is a very simple deductions. Only 2 deduction has been allowed, or we can say 3. Once regarding municipal taxes paid, the second is 30%, which is fixed, and then regarding the interest. And in case of interest, if TDS has not been paid, and if interest has been paid outside India without deducting TDS, then still you cannot claim that deduction. So inadmissible deduction means those expenditure, those deduction, you cannot claim as a deduction from the income. That is called inadmissible deduction. So I hope it's clear. Okay, Almas Sheikh, good morning. Suhail, good morning. Ajay Chauhan, good morning. Swati, good morning. Ram Nivas, good morning. Miss Mukteshwari Solanki saying, good morning, sir. Happy birthday. Thank you so much. You remembered. That's really appreciable. Thank you so much. Yes, today is my birthday, and very interesting thing that I start teaching like 23 years back, and my first class was also on my birthday. I start teaching in my life from the day 21st of November. Okay. Okay, happy birthday. Thank you so much. Thank you so much. Party is due from my side. Okay. Next is many everyone today. Very good sound morning. Okay. Thank you, everyone. Thank you so much that you all remember that. Okay. Srinivasan Venkatarman is asking, sir, good morning. Can you please explain test your knowledge question 3 and 4? Thank you. Yes, Srinivasan, I will explain it. First of all, let's start at the topic of PGBP, and maybe today or in the next class, I will discuss these questions also. But just remind me in the next session or today's session. Fine. Next is, okay, thank you. Question number 4. This must be illustration number 4. Who is asking this? Priyanka Pandey. Just a second. I guess we have discussed illustration number 4. Kindly ask me the problem, like the other student has asked me, sir, that why pre-construction period has not been calculated in that question. So that will be really easy for me to find out. But for time being, illustration number 4 is very simple. What is the issue in this? I have solved it. I have solved it in the class. Kindly go back to the last session and see it once more. And if there is any problem, then ask me that, sir, I was not able to calculate the GAV or municipal value. That kind of question will be answered, of course. Next is Swati Krishna D. So if construction complete on 31st March 24, then pre-construction period is completed by 31st March 23. But 1/5 part is from previous year 23-24 or from previous year 24-25. The 1/5 part will start from the year in which construction has been completed. So if the construction has been completed in 31st March 24, so 1/5 will start from previous year 23 and 24. Clear? Okay, Mohammed Sohail is asking, please explain interest concept of income from house property, Mohammed Sohail. I request you, please go to the last session of your first session of income from house property. We have discussed the provision in detail. Kindly watch that class so you might get the knowledge regarding the calculation of interest. Okay. Okay. Happy birthday. Happy birthday. Okay. Rahul Sharma is saying, sir, before starting PGBP, could you suggest one way to study PGBP? It goes over my head every time. I promise, Mr. Rahul Sharma, this time it won't happen. It will go directly into your head. Let me start explaining the concept. Most of the student thinks that PGBP is very difficult. Most of the students think that it's really difficult chapter to understand because it's huge. It is almost 183 pages in study material, but it is not true. No. In my opinion, there are 3 major heads out of these 5 heads of income. One is income from salary, the capital gain, and the PGBP. And out of these 3 heads, in my opinion, the easiest head is PGBP. Why it's easy, I will explain you. And by the end of our 5 sessions, you will also feel that yes, PGBP is comparatively easy to understand, easy to solve, and definitely very easy to score very good marks. I will explain you. Okay. Happy birthday. Thank you so much. अब तो रोना आ रहा है मेरे को इतनी सारी विशेष सुनकर. Okay. Good luck in future. Okay, so all good morning wishes and birthday wishes has been over. Now let's start PGBP. Before that, of course, as we always do, there is a thought for the day for all of you. This is our thought for the day. Life has 2 rules. Never quit. Always remember rule number 2, that rule number 1. So that's a simple thing to be a chartered accountant. You should never quit. If you won't leave the CA course won't leave you. Okay. So if you are not going to quit this course, you will be a chartered accountant later or sooner. So you will be called a failure only when you will quit something. If you won't quit, you will be successful later or sooner. So remember this quotation, remember this rule that you should never quit. If you decided to do something and if it is right, you have to follow your dreams always. As moving on to our provisions, before that, let me explain you a summary regarding this chapter, which will help you to understand that what exactly PGBP is all about. And the fear regarding this chapter will be gone away after what I'm going to explain you one by one. Okay. So in the PGBP chapter, of course, it's a huge chapter. I agreed, but it's huge. It's not difficult. Understand? There's a difference between. It's a gigantic chapter. It has so many sections that you have to remember. There are so many multiple provisions, but exactly again, even after knowing all this, I am promising you, I am saying you, just believe me, this is not a difficult topic, because the first advantage of this topic is we just need to understand the implication of the provision, not the meaning of provision we need to understand. What I'm saying? Like in the other heads, like we discussed the chapter of salary. In salary, if I'm uh, discussing the provision regarding basic salary, taxability, then first of all, I need to explain you the meaning of this. I explained you this. What is the meaning of basic salary? I explained you this. I said salary which is due during the previous year, due, whether received or not, will be your basic salary. Then we discuss advance salary. So first of all, I have to explain the meaning of advance salary, and after the meaning, we have to make you understand the concept, the taxability, the practical implication. Same in case of advance salary, same in case of arrear of salary, same in case of perquisite. If I'm asking you, if I am teaching you the perquisite, I have to make you understand first the meaning of perquisite, which is non-monetary, facilities, benefit, amenities, and then the implication of that in a numerical perspective. If I'm saying HRA, house rent allowance, then first I have to make you understand that what is the meaning of HRA. If some employee is getting a job somewhere and his employer wants to reimburse the expenditure of his or her rented premises, so the employer can provide him the monetary value, that will be called HRA, or if it is not in a monetary value, it's a facility, that will be called a rent-free house. So in all the chapters of income tax, whenever we explained it, we have to make you understand the meaning of that term and then the taxability or implication in all the chapters. Whether it's residential status, we have to make you understand the meaning of resident. We have to make you understand the meaning of citizenship. We have to make you understand the meaning of person of Indian origin. And then we move on the further to describe or to implement the provision. So in each word which we discussed in the salary topic, almost first of all, we have to explain the meaning to the student, because you are technically hearing these words or reading these words first time in your life. Same is case of income from house property. If I'm saying deemed owner, I have to explain the meaning of deemed owner first of all to you. If I'm saying GAV, I have to make you understand the meaning of GAV, then the how to compute it. If I'm saying municipal value, fair rent, standard rent, vacancy, part of the year let out, to property value self-occupied, pre-construction period, interest. So first of all, I need to explain you the meaning of pre-construction period, what it is, then the implication. So even the rest of the chapter, like capital gain and income from other source, we have to do this. We have to make understand the student, first of all, the meaning of that word and then the practical implication of that word. But in case of PGBP only, this advantage we have that we are not going to explain the meaning of the terms to you. No, we will just move on to the implication, because you already know the meanings of those terminology, those words, what we are going to discuss in PGBP chapter, like depreciation. So do I need to explain you the meaning of depreciation? No, because you are from this background, you are on now intermediate level. So we expect that you should all know the meaning of depreciation, building, plant and machinery, salary paid to the employee, bad debts write-off, reserve, provisions, etc., etc. Office expenditure, opening stock, closing stock, sale, purchase, net profit, etc., etc. Drawings, capital, loss by fire, etc., etc. So the best thing in this chapter that even we need not to explain the meanings of the term, and of course you need not to understand the meaning of the term because you already have that knowledge. So the meaning understanding concept is definitely a very huge relief on your part as well as on our part. So we need to understand the implication. We need to understand the calculation. We need to understand the taxability provision regarding the PGBP provision. So it's a very, very huge benefit or relief under this chapter. Clear? Now move on to the format. All topics under the head, like if we talk about the heads of income, then we have 5 heads of income: salary, charging section 15, income from house property, charging section 22, PGBP, charging section 28, capital gain, charging section 45, income from other source, charging section 56. So we have 5 heads of income, and all heads except income from other source we can say, because this head have very simple kind of tax implication. All these 4 heads having separate kind of format. In case of salary, we have seen that we have to calculate first of all basic salary, advanced salary, then area of salary, then all taxable allowances, then all perquisites, then compensations. After that, we will have our gross salary, then deductions, 16, 1, 2, 3. Then we will have our net salary or taxable salary. So we have a huge format in the case of salary head. Again, in case of income from house property, there is a format. First of all, we have to calculate the GAV. For GAV, we should have municipal value, fair rent, whichever is higher, comparing to standard rent, whichever is lower, compared to actual rent or annual rent in some specific cases. So we will have our GAV, then municipal taxes, then we have our annual value, then 30% deduction, then 2 kinds of interest, current year or PPI. Then we will have our format answer. In the same way, PGBP has also a format. Again, it's a good news. The format we already knew, like the trading and profit and loss account. So under PGBP chapter, for the purpose of calculation of tax, we do not need to go to the balance sheet part. We just need to understand the concept with the help of trading and profit and loss account or income and expenditure account. And now we all know the meaning of trading and P&L account. We need to know the meaning of income and expenditure. So the format we are going to discuss in PGBP, that's not new for any of us. So that's also a good news. So let's see the format we are going to use under PGBP here. Clear? So for the purpose of PGBP, as I explain you steps one by one, I promise you, if any one of you think PGBP is difficult or any of your friends says that it's very difficult, after first session, second session, you will understand it's not difficult. It's just the problem that you might not understand it properly. or somebody else from where they are taking classes from private coachings, etc., they might not be able to make them understand easily, because there is nothing difficult in this word. Nothing is difficult. It's just the approach, the way we need to understand things might be wrong. Clear? So, what we are going to do in the PGBP, understand it very carefully, and it's very simple thing. Under PGBP, there will be a trading and profit and accounts, profit and loss account, that is going to be given in the question already. We need to find out the net profit of the business or the profession. This is what we need to find only. But the thing is this, in your question, a trading and profit and loss account will be given in the question already. But that will be given as per accounting provision. So there will be a trading and profit and loss account in the question, but that will be as per accounting provision. Clear? Now, what is this accounting provision, trading and profit and loss account? It will be given like a normal trading and profit and loss account, like this. There will be two opening stock, value will be given, two purchases, value will be given, to salary to staff, value will be there. The other terms might be the provisions to reserves, to income tax paid, to office expenses, to conveyance expenses, to bad debts provision, and after that might be to net profit. There will be more expenditure will be given in the question in the debit side of that. And in the credit side, there will be by sale, of course, our income, by rent, by interest, dividend, by closing stock, as on. Clear? So there will be no new terminology. Now, what the benefit of this? Because I need not to explain you the meaning of these terms. We already knew the meaning of these terms. And might be one more thing, one important point I have left, like to depreciation, of course. Suppose, clear? So there will be a net profit will be given in the question, and there might be some additional information also there in the question. Like there are some additional information like this can be given in the question, that closing stock is undervalued by 20,000 rupees. There might be additional information. Clear? Might be second additional information that expenses of business travel not claimed 10,000 rupees yet. So there will be information, there will be a profit and loss account as per accounting provision will be given in the question, and as per accounting there will be a profit there. Clear? This is the question part. So question will be providing all these trading and profit and loss account and the additional information also. Clear? Now technically what we need to do, now the solution part says, that we have to calculate net profit as per income tax provision. Net profit as per income tax we need to find out. Now this is a solution part. So we have the net profit, but this net profit is as per accounting provision technically. Understand? And we have to change this net profit into our profit as per income tax, because there is certain differences in the provisions in respect of accounting and income tax. So depreciation as per income tax calculation is different in comparison to the depreciation calculation under accounting. So there are some expenses which is not allowed as expenditure in income tax, which is allowed as expenditure in accounting provision, and might be vice versa also. So there are some incomes also which cannot be treated as income under PGBP head, under income tax, but which might be treated as income for PGBP under accounting provision. So we will solve this question to find out the profit of income tax. For that, we have to solve it by taking, first of all, we will take net profit as per accounting provision, which will be given in the question. We will take this profit. Clear? There is no confusion. Then we have to apply the provision as per income tax, those expenditure which is not expenses as per income tax. Let me tell you, opening stock is, yes, it is both way same provision under income tax and under accounting. So we will not do anything in respect of opening stock. Purchase also remains same, salary to staff is same. Now income tax says we will not allow any provision. We will not allow any provision. Accounts allow provisions as expenditure, but income tax say no, we will not allow any provision. So suppose if the provision value is 5,000 over here, which has been claimed under trading in P&L account of accounting. So if income tax says that we will not allow your provisions, so what it will affect on the profit? If I remove this expenditure from here, so profit will increase or decrease? The accounting profit which has been given over here, suppose 1 lakh rupees. The accounting provision profit was suppose 1 lakh. So if this 5,000 has been removed from the expenses part under income tax, so how it will affect? It will increase your profit. So anything from the debit side, if has been removed, what will be the effect? It will increase your profit under income tax. So what I'll do, I will add this provision in my accounting profit. It's simple mathematics. There is no complexity, there is no complication, there is nothing difficult till now. You have to take the net profit that will be given in question as per accounting. And now we have to sort it these expenditure, those expenditure which is not allowed as expenditure have to be removed. And if you remove any expenditure from this side, that is going to be added in the profit. We called it disallowed expenditure. We call them disallowed deduction, disallowed expenditure. That will increase your profit. Next is to reserve. Again, under income tax, reserves are not allowed. So no provisions allowed, no reserves. So again, what we will do, whatever the amount of reserve has been claimed as expense, going to be increased your profit under income tax. Again, income tax expenditure under income tax is not allowed. Accounting allowed it, but income tax does not allow expenditure. Why it does not allow the provision? Why it does not allow the reserve? Why it does not allow the income tax? Because this has been written in the provision what we are going to discuss. How I know about this, that provisions are not allowed? Because I have read all the provision, of course, before you. So in this chapter, this has been written In this chapter, when I start teaching you, there's a concept which say provision will not be allowed under income tax. Reserves will not be allowed under income tax. Income tax paid will not be allowed under income tax as an expenditure. So we have the provision. These are the provision what we are going to discuss under this chapter. Under different section, it has been written. So when we will start this chapter, you will find that it has been written over there that reserves will not be allowed. Income tax would not be allowed. So we just need to do it, add or subtract. That's it. There is no extra format like salary. There is no format like house property. The simplest, the easiest format under all heads of income is PGBP. You just need to do one thing. Either any of this expenditure is going to be add back or not going to be add back. Either any of these income is going to be deduct or subtract or not going to be subtract. That's it. So all amount of trading account or profit and loss account as per accounting either need to be deducted or just need to skip. That's it. This is the format. Just imagine how simple it is. We just need to do this. Either we need to add back or deduct. That's it. Next, office expenditure. Yes, these are allowed as expenditure under income tax also, conveyance also. Now the bad debts provisions. Again, it's a provision. So bad debt provision is again going to be add back, whatever amount it is. Now the depreciation. It's a very important topic. This depreciation is per accounting provision. So if depreciation is per accounting provision, we have to add it back. And we have to find out the depreciation as per Income Tax Act. And that income tax depreciation need to be deducted. How we need to find out the income tax depreciation, the concept, the calculation provision, the section will explain it. But whatever depreciation will be given in the question in our trading and profit and loss account, that always has to be added back. Then we will find the depreciation as per income tax and that need to be deducted. Now coming on to our credit part. Sale, again, sale of course it's a business ship under accounting as well as income tax. Now rent is the part of income from house property. For this rent, a specific head has been maintained that is called income from house property. So accounting might include the rent, the interest, the dividend under trading and profit and loss account. But as per income tax, there are separate head has been made. So this rental income will not be the part of our PGBP as per income tax. So that is going to be deducted. Rent going to be deducted. Again, the interest and dividend, they are part of income from other sources. So interest and dividend is also going to be deducted from my profit. Now, adjustment has already been given that it says closing stock is undervalued by 20,000 rupees. So this closing stock is the part of my business under accounting as well as under income tax provision. But the question says it has undervalued. So I have to overvalue it by 20,000 to make it correct. So if I'll increase the closing stock by 20,000, how it will affect my profit? My profit will increase or decrease. It's a very simple math. If this part is increased, credit side, profit will increase. So I have to add back 20,000 in the value of closing stock. So that means I have to increase my profit by 20,000. And the last expenditure on business travel not claimed 10,000 yet. So in the debit part, we just forget to claim 10,000 as a business expenditure under trading and profit of accounting. So now we will claim that under income tax. So if I'll claim any new expenditure under the debit, it will affect my profit by decreasing the profit. So that will decrease my profit by 10,000. So all these plus minus, now we will, if we'll do, we have our net profit as per accounting. So whatever will be the calculation of this plus minus value, that will be my net profit as per income tax. That is our answer. So this is the format to solve the question. And you can see this will be given in question. So I just explain this format to make you understand that what we are going to do in this case. So this is my solution part only, not this one. And this will be derived from these values. And again, just imagine what we just need to do. Nothing. Just take the net profit as per accounting and just you need to do the plus, minus, that's it. And how and when we will allowed or disallowed. That means added back or subtract any value. That is as per the provision what we are going to discuss one by one. Everything has been written in the provisions. We just need to read the provision, and after the reading, we will be able to understand that do I need to add opening stock or not? Do I need to purchase treatment? What do I need to do with the salary, the provisions, the reserve, the depreciation, the income tax, the dividend, the interest? Everything has been written in the provision. So one by one, we will take the provision and you will definitely going to feel it is a very, very easy chapter because there is no format. Imagine the format of gratuity, the format of pension, the format of calculating house rent allowances. And that is only the part, one part of that salary head. Remember the provision of calculating that TP, taxable perquisite of that provident fund interest, the one of the most difficult topic of salary topic. Can you imagine? There is no calculation like that under our PGBP. We just need to do one thing, add, subtract, simple, sort it. Imagine how easy it is. But might be when the student try to understand the chapter by themselves or from some other guidance, and they might not need to explain this thing. But in this topic, the format is so simple and it's so scoring because we have, of course, the step marking. So even if you do 1 point wrong or 2 point wrong, still you have the chances to claim these kind of point marks. So if under the salary topic, imagine if your basic salary is wrong, then almost all the calculation of salary topic will be wrong. Everything is based on basic salary. Suppose if GAV is wrong under income from house property, what you will get in the answer? 0 in the marks. But under PGBP, we have the opportunity to claim very good marks with the help of step marking because every point is a separate implication. Even if 1 or 2 you are not able to solve correctly, you might able to get the very good marks even out of a 10 marks question, even if 1 or 2 or 3 points is not correct. So believe me, it's a very simple topic and it's very easy to solve. We just need to understand which is going to be added back, which is not going to be added back, which is going to be deducted, which is not going to be deducted. And these provisions also easy. There is no provision like gratuity, pension, leave encashment, compensation, retrenchment, VRS under this PGEP. There are small provision. The problem is that they are huge, multiple provision, but they all are individually very easy. Clear? So in majority, I can explain you the diagram like this. We should take net profit as per accounting provision, and that will be given in question. Fine. So there is no worry regarding this. Then we have to add disallowed expenditure. That means debit side those expenditure which should not have been allowed under income tax. We need to add back all of them, like provisions, reserve, bad debts, right? Provisions like if TDS has not been deducted, there are some expenditure like personal expenditure, income tax paid. These are not allowed. Right? We will discuss all of them. Then less disallowed income. That means from the credit side, we have to remove those income which do not fall under PGBP head. So if any income which falls under any other head cannot be the part of our PGBP head. then plus minus additional information, which has been given as an extra information that might be going to affect as an addition or as a subtraction. Then always remember, you have to add depreciation as per accounting, which will be given in your trading and profit and loss account. That always going to be deducted, sorry, add back, and we need to deduct depreciation as per income tax provision. So that will be net profit as per income tax. That is my answer. Suppose in any question, depreciation as per accounting has been given, okay, and there is no information to calculate depreciation as per income tax. In most of the cases, almost around 90% question, the information to calculate depreciation as per income tax will be there. But in 10% it might be possible that there will be no information given to calculate DEP as per income tax. So if it happens, then whatever depreciation is given in the question as per accounting will be assumed same as per income tax. So in that scenario, we will add depreciation as per accounting and we will assume that yes, it is also same under income tax. So we will deduct the same depreciation assuming as per income tax also. So the question has no information regarding this depreciation, no separate calculation provision has been given. Then this will be equal. So whatever we will add, we're going to deduct that also, assuming that is exactly the same depreciation as per income tax also. Fine. So that was the basic concept regarding the PGBP. This was the introduction. Even before the introduction, this is the introduction before introduction of the PGBP. This is just to explain you that what exactly we are going to do in this chapter. The format is really need to understand before starting the chapter, because if I'll start the provision regarding the depreciation, regarding the provisions, regarding the reserve, etc. So you might not able to understand that why sir is teaching all these things. What is the implication? So just I just in advance make you understand that why we are reading the provision, that this is allowed, this is not allowed, this is income tax expenditure, this is not income tax expenditure, why I am doing this. So you will understand why, because we have to add it back or deduct in the solution process. Understood? I hope you understand. So now we are moving on to the provision part. So this was the only chapter in which we have to go through the summary part before starting the introduction. So I just give you the summary of the chapter, the calculation provision, and why we are going to discuss one by one provision. There will be concept which say this is allowed in income tax but not allowed under accounting. So now you understand why we are going to discuss this kind of provision, because only with the help of this understanding we are able to solve the question, and it's easy. I promise it's easy. So fine, if you work hard, you will win, not immediately, but definitely. Okay. So that was meaning of business and profession. So how to differentiate between business and profession? Under PGBP head, the implication, the provisions are same. Whether you are running a business or a profession, the provisions are exactly the same for both concepts. So the calculation, the computation part is different. This is just for your knowledge to understand the difference between a business or a profession. The tax payable by an assessee of his income under this head is in respect of profit and gains of any business or profession carried on by him or on his behalf during the previous year. Clear? The difference between business and profession, the term business has been defined in section 231 to include any trade, commerce, or manufacture, or any adventure or concern in the nature of trade or commerce or manufacture. There is a simple definition. You can read it by yourself. There is no complexity. The term profession has not been defined in the Act. It means an occupation requires some degree of learning. So a doctor is a professional, a chartered accountant is a professional, a company secretary is a professional, a lawyer is a professional. So does a painter, sculptor, or an auditor, a lawyer, a doctor, an architect, and even an astrologer are person who can be said to be carrying on a profession, but not business. However, it is not material whether a person is carrying on a business or profession or vocation, since for purpose of assessment, profits from all the sources are treated and taxed alike. So for the purpose of income tax payment, there is no as such difference. They both are going to be taxed as per same concept. Business necessarily means a continuous exercise of any activity. Nevertheless, profit from a single venture in the nature of trade may also be treated as business. So these are general definitions. Meaning of profits, it can be cash or kind, capital receipt, voluntarily receipt. Application is immaterial, legality of income, distinct business, and computation of profit. So we will discuss all these 7 terms one by one. It is explained as follows. Before that, let me take some queries if it has been sent by you. Okay, still happy birthday wishes are coming. Thank you so much, everyone. Miss Rimpa Santra is asking, due to my office, I can't attend live classes, sir. Okay. I have doubt regarding salary per grade of car facility. In case of government employee received car facility, then it is exempt. No, it is not exempt. It depends, which is if the car is owned by the employee, then it's taxable for all kind of government employee. If car is provided by the employer, it's going to be taxable for only specified government employee. The concept of car perquisite is same for all the employees, whether it's government or not. Clear? Okay. Next is Miss S.R. Nividha asking, sir, can you explain how to revise tax law every provision? How to revise? You have to find a certain time for the chapter and you have to give like 1 hour every day to the income tax to revise the whole provision. Income tax has a this subject has a very unique characteristics, let me tell you. Like if you are going to leave income tax for 1 month, if you have completed the course, you have solved all the question, anything I'll revise it after 1.5 months. And when you start after 1.5 months, you will find a new topic. You won't be able to understand the provision easily. So income tax subject, you have to revise it regularly. Find out 30 or 40 minutes in a day, and you have to continuously revise all the chapter from first, second, then complete the revision, then again started it. It does not need your much time. Like 40, 45 minutes is it's good time to revise it. But you cannot leave this subject for 1 month, and if you will start revising it after 1 month, it will really gonna bother you. You have to revise it continuously. That's the only way to understand this subject. Okay, thank you so much. Okay, thank you. Santosh, okay. Devraj Sarji, meaning of PGBP, profit and gains of business and profession. Okay. In PGBP, Tushar is asking what I have to follow schedule 3 profit and loss account or sole proprietorship. The company's provisions regarding the calculation of PGBP, the company's is not in our course. That's why we do not have MAT provision also. We need to follow the proprietorship format. Okay. Tushar Kole is asking, sir, please say again in Hindi. What I need to say again in Hindi? AS22, no, it is not related to this chapter. AS22 has no applicability for PGBP. It's for accounting. Under income tax, the ICDS has not been applicable. It has been written in the future notes also. Do not worry. Okay. Next is Yes, Harinder Sharma. Generally, business maintained one profit and loss account as per accounting provision. And then at the time of paying income tax, we have to change that profit by adding or deducting certain expenditure or income in that accounting income tax, accounting trading and profit and loss account. So we will get our profit as per income tax provision. Clear? But if they want, they can maintain two trading and profit and loss account also. Okay. Ved Prakash, thank you very much, sir. I cleared C Inter Group 1 exam in May 23 because of your teaching and motivation. Very happy to listen that. High five from my Wi-Fi and congratulations, of course, Ved Prakash. Next is Miss Hiba Bilal is saying, sir, salary is taxable under income from salary. Why don't we add it back while calculating in the same way we did it for rent, interest, and dividend? Understand, na? Salary is not the income of employer. We are reading the provision from the point of view of employer, not employee. You are getting it wrong. Like if there is an employer and if there is an employee. So employer pays salary to employee, like 2 lakh rupees. So under salary head, we read all the provision from the point of view of employee. That is income in the hands of employee. But under PGBP, we are studying the provision from the point of view of employer. So for employer, it is what? It is expenditure. It is not income of employer. It's income of employee. Rent, dividend, interest, etc. was the income of this employer. So we are going to add it back. But in case of salary, that is paid by employer. So that is an expenditure of employer. So how it can be deducted from the profit? It is not the income of employer, it is the income of employee. So under salary chapter, we understood the provision from the point of view of payee, receiver, employee. Under PGBP, we are understanding the provision from the point of employer, payer, giver. Okay. So that's why we are not going to add back salary. It's an expenditure, it's allowed expenditure. Next is Swati is asking, sir, conveyance expenditure is allowed under both salary and PGBP. Okay. All of you, please understand one thing. Do not correlate salary and PGBP chapter. Salary is from the point of view of employee and PGBP is from the point of view of employer. Salary is from the point of view of that person who is receiving salary, conveyance expense, petrol expense, education allowances, etc. From the point of view of the person who is receiving that. Clear? Employee. And this is from the point of view of that person who is paying that amount. So if you're asking regarding conveyance expense, 1000 rupees, which is paid by employer to employee. So if the question is regarding salary, then I will treat this 1000 as his income depending upon the provision. It's a conveyance allowance, it's a conveyance facility in the heads of employee. For the purpose of employer, we will discuss the provision as a business expenditure. So whatever is paid by employer to its employee, this is going to be treated under PGBP of employer. There is no correlation of employer and employee salary chapter or PGBP. Salary is from the point of view of receiver and this is from the point of view of payer. Understand? So do not mix those provisions. Swati Pandey, sir, please explain disallowed expenditure. Disallowed expenditures are those expenditure which is not treated as expenditure under income tax. So those expenditure which are expenditure under accounting. But under income tax, if these are not treated as expenditure, that will be called disallowed expenditure. For example, here is a trading and profit and loss account. The to provision for bad debt. So accounts might treat it as an expenditure, but for income tax, that's called disallowed expenditure. So disallowed expenditure means this is going to be add back to calculate the net profit as per income tax provision. 2, penalty. Any penalty paid by business is disallowed expenditure also. So why these are disallowed? Because it has been written in the sections. We will discuss that penalties is disallowed, provision for bad debt disallowed, etc. Do not worry. There will be provision. Even to outstanding bonus, that is allowed an expenditure under accounting, but under income tax, that is a disallowed expenditure as per section 43B. So we will discuss all these provisions one by one. Next is the GST paid is allowed as a deduction. Yes, it's an indirect tax. It is allowed. We will discuss all the provision. Do not ask this is allowed or this is not allowed. One by one, I will teach you all the expenses which is allowed and which is not allowed. Just be focused what we are discussing till now. Till now, I just explained you the concept of calculation of PGBP net profit under income tax. If you are able to understand, that is very well done. Do not think this expenditure or your imagination expenditure is going to be allowed or not. We have answer of all these queries also. Just relax, stay, enjoy the study. Just try to enjoy this. If I am teaching you something and you are able to understand that topic, you are done. Do not worry for the future topic. I'll explain each and everything. Okay. For PGBP, professionals have to prepare income and expenditure, Devendra, but the concept is same. Again, all the provisions of PGBP head is same. The addition, the deletion is same. But for them, they prepare income and expenditure. Clear? Harish, is there an expenditure which is disallowed in current year but allowed in next year? Yes, there are expenditure due to TDS effect, due to section 43B. It might be possible. What kind of expenditure these are, we will discuss. Do not worry. Devendra Singh, if there is a sole trader who charges salary for himself from his business, that will be allowed expenditure? No, it's a personal expenditure. Again, I'm asking you all one thing. Do not create your expenditure right now because we have provisions for that. We have provision for your that salary of proprietor. We have provision for that disallowed expenditure allowed in next year. We all have all the provision. We have not even started the PGBP yet. If you get what we discussed till now, that is fine. Okay. So now moving on to our notes. Queries has been taken. So we were discussing that meaning of profits, and one by one we are discussing the contents which is included under the meaning of profit topic. Profit can be in cash or in kind, of course. In the starting chapter of basic concept, the definition of income, it says that income can be in cash or in kind or facility, etc. So same in case of profit. Profit may be realized in money or in money's worth, that is cash or kind, where profit is realized in any form other than cash. The cash equivalent to the profit on the date of receipt must be taken as the value of income received in kind. Capital receipts. The capital receipts are not generally to be taken into account while computing profits under this head. Capital receipt generally go under capital gain. So, but there are some exception. In some cases, some capital receipt will also form part of our PGBP income, but not generally. Which are those capital receipt? That will be discussed. Voluntary receipt. Payment voluntarily made by person who were under no obligation to pay anything at all would be income in the hands of the recipient. This is the good thing. This is the good concept. Then if I am providing services to my client and I am charging the money, that is my business income. But even if somebody is going to pay me something voluntarily, there is no legal obligation, still he is providing me some amount voluntarily, still that will be my business income. Example has been given, you can see it. If any CA provide consultancy via YouTube channel free to the public, and any viewer pay him fees due to the benefit of his advice, even when that viewer has no obligation to pay, still he just paid you some amount, still that will be my business income. They were received in the course of a business or by the exercise of a profession or vocation. Thus, any amount paid to a lawyer by a person who was not a client but who has been benefited by the lawyer profession services to another would be accessible as the lawyer's business income. These are general provision we are reading. Application of the gain of the trade is immaterial. If I'm earning any income from my client, that is my business income. Even if after earning that income, if I'm going to apply that income for charity purpose or for any other purpose, donation, etc., it does not make a difference. It will still be my business income because we received that income due to our business and profession. So applicability is irrelevant in this case. Clear? Legality of income, again, there is no difference between legal income and the illegal income. Income is income and need to get taxed with the same rate of taxes. So the illegality of a business, profession or vocation does not exempt its profit from tax. The revenue is not concerned with the taint of illegality in the income or its source. Income from distinct business, if you have multiple business, then the income of those multiple business will be calculated separately. But the tax need to be paid in aggregate. The profit of each distinct business must be computed separately, but the tax charged under this section is not on the separate income of every distinct business, but on the aggregate. Computation of profit, the net profit is going to be taxable under this head, not the gross, not the sale. We have to tax the net profit part of a business, not the gross profit, not the sale. Method of accounting, it says there are technically two methods of accounting. One is our mercantile system, the other is our cash system of accounting. So income under the head PGBP and income from other source. These two head has this benefit that income under the head PGBP and income from other source can be computed in accordance with either the cash or mercantile system of accounting regularly employed by the assessor. So you can apply either the cash system of accounting or mercantile system of accounting in case of PGBP or income from other source, which suits your business, and you have to apply it regularly. Clear? There are some exceptions. First, regarding the interest. Interest in case of compensation. Interest in case of compensation, that will be discussed in capital gain topic. That interest is going to be taxable under income from other source only on received basis. You have the option to taxable income from other source on receipt or due basis, as the method accounting says. But interest income on compensation will be taxable only on the cash system, that means the received system. Same in case of income referred to in section 224 in the form of a subsidy or a grant which is received by government is going to be taxable under your PGBP or any other section only on the basis of receipt basis. So these are two exceptions in which income is going to be taxable under PGBP or income from other source head on the basis of receipt only. It cannot be taxable on due basis. Under section 145(2), the central government is empowered to notify in the official gazette from time to time income computation and disclosure standard, that is ICDS. So somebody was asking me that is AS22 applicable? So this is the answer, because the ICDS 1, 2, 3, 4, 5, 6, 7, 8, 9. But these ICDS would be applicable in the final level. So in this intermediate level, there is no impact of ICDS we need to discuss. So this is a good news for all of us because we need not to understand the implication of ICDS on this level. Now this is started the income chargeable under the head. This is our charging section 28. Now it will explain which kind of income is going to be taxable under PGBP head. As salary charging section says, there must be a relationship of employer and employee. And if salary due or received, whichever is earlier, is going to be taxable. So the charging section of salary explain that any payment which flow from employer-employee relationship will be the salary income and will be taxed either on due or received, whichever is earlier. The PGBP head charging section 22 says that if there is a building, the assessee is the owner or the deemed owner of that building. And if it is not used for his business or profession, in that case, that is going to be taxable under house property. In the same way, now charging section 28 of PGBP will explain you what is going to be the part of your business income. And let me tell you, it's very easy to understand. Even we have point number 1, 2, 3, 4, multiple points, 5, 6, 7, and 8 and 9 and 10. We have almost 10 points to explain the charging section 28. We will discuss all these points, but I can make you understand all these 10 points with the help of only one basic concept. What it is? Charging section explain 10 points. And I can explain you all these points only in a single sentence. It does not mean that you need not to read all these 10 points. We are going to read each and everything. But the summary of 10 points is exactly the one thing. It says, if you earn any income directly or indirectly from doing or not doing, this is very important, not doing business activity. So technically, all these 10 points is exactly saying the same thing, that if you are earning any income directly or indirectly from carry on any business activity or for not carrying on any business activity. The important thing is not carrying on any business activity. So if you are getting any income, any receipt, even for not carrying on any activity, that will also be treated as your business income. How it's possible, that will be explained one by one in the provision. But the summary of all 10 points is very simple. If there is any activity in the nature of business and you are earning any receipt for doing that activity or for not doing that activity, that will be your business income. The other way also we know that we have 5 heads of income: salary, house property, PGBP, capital gain, income from other source. So if any income, either if it is fall in salary head, it does not fall under salary. If it is not a house property, if it is not a capital gain, if it is not a other source, then it will be of course a PGBP income. So either in this way also you can find that some income is going to be taxable under PGBP or not. But the basic provision, the concept why you have to understand like this, charging section this. So now we will understand the charging section provision one by one, all 10 points. It says income from business or profession. Income arising to any person by way of profits and gains from the business or profession carried on by him at any time during the previous year. So if you are earning anything via carrying on any business activity at any time during the previous year, that will form my PGBP income. So any income which does not fall under these 10 points will not be my PGBP income. Any compensation or other payments due to or received by any person by whatever name called manage the whole or substantially the whole of affair of a company, or at or in a connection with the termination of his management or office or the modification of any of the terms and conditions relating thereto. So if any person who manage the whole of the company or the affair of an Indian company, that means managing director, etc. And if he is receiving any compensation on termination of his services, then whatever amount he will receive, that is going to be taxable under PGBP head. In the same way, if any person by whatever name called holding an agency, if I am running any agency in India for any part of the activities relating to any business, if I am running an agency of any business, and in that case, if I am receiving any compensation again for termination or modification of that agency, that is going to be taxable under my PGBP head. If any person for receiving any compensation, any person for in connection with the vesting in the government or in any corporation owned or controlled by the government under any law for timing in force of the management of any property or business, as specified cases, these are not that important. Any person by whatever name called in connection with the termination or modification. So ABCD point says that if any compensation received by person mentioned in point number A, B, C or D, that is going to be his PGBP income. Income from specific services performed for its member by a trade or profession or a business, that is also going to be its business income. Incentive received or receivable by assessee carrying on export business, profit on sale of import entitlements. So if there is an import license, import export license, if you transferred it and having some profit, that is going to be taxable under PGBP head. Cash assistance you received against export, that is going to be your PGBP income. Custom duty or excise duty drawback, if you have paid any duty and on the export of that product, if government refund the amount of that duty as duty drawback under Custom Act or excise, that is going to be again your business income. Profit on transfer of duty entitlement passbook, if you transfer this document also, any profit like sale of import license is going to be taxable under PGBP. So these point number A, B, C, D are technically export advantage due to business. You can see you are getting either A, B or C, D due to your direct or indirect involvement in business activity. So that is also going to be taxable as your PGBP income. Value of any benefit or perquisite due to any business activity. The value of any benefit or perquisite, whether convertible into money or not, arising from business or the exercise of any profession. If a company provides rent-free accommodations to a lawyer in consideration of professional services rendered by him to the company, the value of such accommodation would be assessable in the hands of the said lawyer as his income under the head PGBP. Suppose I am a chartered accountant. Why I am supposing? I am a chartered accountant, of course, and my client, I am providing services to my client. And if he provide me a residential accommodation for free, suppose the market value of that accommodation, the market rent for that accommodation is 15,000 rupees per month, 15,000. He provides me that accommodation free. I am not his employee. I am providing him services as a consultant. I am not his employee. So if I am not his employee, then 15,000 per month will be my income under PGBP. Understood? If I would have been his employee, then the rent-free house provision will be applicable. Clear? Next is sum due or received by a partner of a firm. If a partner received anything from a partnership firm in the nature of bonus, commission, salary, interest, remuneration, by whatever name called, that will be the business income of partner. We have already discussed this in the salary topic also, that if salary received by a partner from a firm will not be the income under salary head, because there is no employer-employee relationship exist. And I have told you that anything received by partner from partnership firm in the nature of salary or interest, that is going to be taxable under PGBP head of that partner. However, there is some provision, some specific provision, that how much salary is going to be taxable, how much interest is going to be taxable under section 40B. That is also a part of our PGBP topic. We will discuss section 40B later. Right now, we are just discussing what kind of income will fall under PGBP head. Next is, suppose a firm pays interest to a partner 20% simple interest per annum. The allowable rate of interest is 12%. Now, this allowable rate is given in section 40B. What we will discuss later. So, you might get confused why 12%, what is 8%. So, please do not get confused. That has been written in the topic of partnership firm, which will be discussed later in PGBP. So, for time being, you just understand that whatever interest will be paid by the firm, a certain amount is going to be taxable under partner PGBP income. Why 12? Why 8? Why 8? I will not explain or discuss this point over here. We will discuss this point under our PGBP head. Okay. This is a part of our partnership firm section 40B. Next is, any sum whether received or receivable in cash or kind under an agreement for not carrying out any activity. Now you can see, for not carrying out any activity. So if you are receiving any amount for not carrying on any activity relating to any business or profession, so that will again a kind of business income, will be taxable under PGBP. How? Let me give you an example. Suppose Mr. A is running a showroom in New Delhi of brand, suppose brand name is W. And in New Delhi, there is Mr. B, C, and D also having the showroom of this brand. So there are 4 showrooms of the brand in the New Delhi. Mr. A wants to run this brand showroom only in New Delhi. So he offer Mr. B, C, and D, but I'll pay you 20 lakh rupees each. And you surrender your license, you surrender your copyright, you surrender your patent, you surrender your franchisee for carrying on sale of this brand in Delhi. Suppose Mr. B, C, or D accept this. So technically Mr. B, C, and D is getting 20 lakh rupees for not carrying on business activity. Understand? For not carrying on, because they are taking money, so they will stop doing this business activity. So if any of them or all of them receive this amount is also going to be taxable under their PGBP head. So I was explaining you the activity of carrying on business activity, income regarding that carrying on activity is going to be taxable as PGBP, as well as if you are getting any income for not carrying on any activity, that is also your PGBP income. Clear? It's a very simple provision, of course. If in the question it has been given that Mr. A receiving some income for not carrying on any activity, that we are going to taxable that amount under, of course, PGBP head. Next is, if not carrying on any activity in relation to any business or profession. For not sharing any know-how, patent, copyright, trademark, license, franchisee. So if we are receiving any amount for not sharing any patent, not using any copyright, not using any patent, so due to that, my business activity is not carrying on further, but the amount we will receive regarding this is going to be taxable as my PGBP income. There are meaning of certain terms. You can read it or you can just read it. There's nothing technical in that. Any sum received under a keyman insurance policy. So if there is a keyman insurance policy of a business employee of any organization, and if any amount has been received on the maturity or on the implication of that keyman insurance policy. So if any sum is received by the assessee, that means employer, the businessman, that amount is going to be taxable as his business income. If that amount of keyman insurance policy received by the employee or his family member, that is going to be taxable under salary head or income from other source depending upon the circumstances. But if it in the question it has been given that any sum of keyman insurance policy is received by the employer, that is going to be taxable as his business income. Fair market value of inventory on its conversion treatment as capital asset. So if we are having our stock in trade and we convert our stock in trade into our capital asset due to any reason. Clear? So if I am a builder and I am having multiple buildings as my stock in trade, but I converted 2 buildings out of that stock in trade as my capital asset because I am using that building for my office premises now. I will open my office or branches in that stock in trade buildings. So that will be now my capital asset. They have converted from stock in trade into capital asset. So at the time of conversion, the fair market value will be treated as the business income. The same provisions also in the capital gain chapter in the reverse case, that if you convert your capital asset into stock in trade, in the same way, FMV will be the capital gain income. And here we call that if we have a stock in trade and we converted our stock in trade into our capital asset, then the fair market value at the time of conversion will be your PGBP income. Point number 10, sum received on account of capital asset referred to section 35AD. So this point I cannot explain right now because for that purpose we need to understand the provision of section 35AD. That will be discussed in assignment number 2 of PGBP. This is assignment number 1 what we are discussing. Then you will be able to understand what I was talking about. So point number 10 I skip. We will discuss this point when we will read the section 35AD provision. Now, 2 kinds of business, speculative and non-speculative incomes. And before that, let me take some queries. Avnish is asking, if a son pays salary to his retired father for working in his store, I guess, is it an expense for son? Again, I asked you all that just have patience. All these kind of question we have provision. Section 40A have the provision regarding these circumstances. But for the time being, to those impatient students who are not listening what I'm saying, yes, it can be allowed as a business expenditure if the salary is reasonable. The salary should be reasonable as per the market value. So if the son is paying salary, suppose 50,000, but in the market that kind of person, that kind of qualified person available at the salary of 40,000, then only you can claim 40,000 as an expenditure. Who will decide the salary market value? Assessing officer. So we have a special provision regarding it. Whatever you can even think, the act has been made all the provision for that. So just relax. Every question regarding this expenditure types, we have answer. Next is Devendra Singh. Okay, Vaishali Bindal asking mercantile system. Do not ask this kind of question, Vaishali. You are an intermediate level, of course. Cash system and mercantile system you do not know. Sorry, I cannot explain that. It's a part of accounting, and I believe and I suppose that you should know the answer. Mercantile system means accounting on due basis. And cash system means on the cash basis accounting. If amount received, that will be income. If it's paid, it's your expenditure. Under mercantile, the due based concept will be applicable. Okay. Swati Pandey is saying, sir, please explain income from distinct business. Like, of course, if I'm running my CA profession, oh, sorry, CA cannot run any other profession. So, a businessman having a hospital, a hotel business also, a trading business also. So, a person can have multiple business. So, they all profit and loss account of separate business will be calculated separately. So net profit of all business activity will be calculated separate profit and loss account. But at the time of paying of tax, the income need to be paid, need to be taxed on aggregate income of all these business together. But for the purpose of calculation of PGP, we have to find out the net profit as per income tax separately for all the businesses. Next. Pritesh Suthar, Mr. Dear Sir, I have attended all your sessions of previous batch. The way of your teaching and concept clarity is excellent. Thank you very much for these classes. Thank you for the appreciation, Mr. Pritesh. Thank you so much. Okay. Thanks not for us only. The thanks should be for the BOS and the institute also. Our director, our new directors of BOS, all the coordinators, all the person who are actually working for it. So that's why I told you in my starting class also that we are just the face, what you are seeing, but technically a huge team actually behind this thing. So whenever you feel that your faculty is good, kindly thanks to the BOS also because they have actually chosen us. So they are the main originator of this evolution. Okay. Tushar Roy asking, what is scheme and insurance policy? I guess scheme and insurance policy point must have been discussed in earlier basic concept, but if it is not, let me tell you what is the meaning of scheme and insurance policy. So in every business, there are some key men. Key men means the important person of a business, the most knowledgeable, the most hard worker employees or officer. Like in our house, the key man is who's earning, our father and mother might be possible. So, of course, the key person means the main person, the most important person of a business. So, if something happens to him, business might not be able to survive. So, to protect our business from any financial crisis, in case of any casualty of that person, suppose Mr. A is the key person of a company that is XYZ Limited. So XYZ Limited knows that if Mr. A having any casualty, so business might having a huge loss because the customers, the supplier technically trust on Mr. A or Mr. B or Mr. C. It might be multiple person also. So this company has taken a life insurance policy that is called, as the name suggests, key men. That means the most important persons of a business. Key man insurance policy of suppose 5 crore. So that means 5 crore each. So if any casualty happen with Mr. A, B or C, so company will receive 5 crore rupees. So it will be financially strong. So financially there will be not much problem will arise due to the loss of any one of it. So that's called key man insurance policy. So on the maturity or on the death of Mr. A, B or C, if the company receive any payment, that is going to be taxable under PGBP head. So, if in your trading and profit and loss account, the amount has been written in the credit side that by Keyman insurance policy money received, that will be our business expenditure. We are not going to subtract it for the calculation of net profit as per income tax. Clear? If this money, Keyman insurance policy money, if some amount has been received by the employee, that is going to be taxable under his salary head. And if it is received by his family or after service, it is going to be taxable under income from other source. Clear? Okay. Next is Almas Sheikh asking, if we file a complaint against a big company and get some huge amount as compensation, hence it is PGBP. It depends, Almas, if we are running a business, if I am running a business and that big company is a supplier or a customer, and due to some dispute, we filed some suit against him and getting some compensation due to our business activity, then it is my business income. But if it is a personal, like I purchase as a I am working in a company as a salaried employee, and I purchase some product of another company, and due to some problem in that product, I filed a complaint against that company and I get the compensation. In that case, it won't be our PGBP income. It may be our other source, etc. So if yes, you got the compensation due to your business activity directly, indirectly related, then it will be your PGBP income. Okay, again, happy birthday. Thank you, Hemlata. Okay. Satyam asking what is the meaning of know-how. You can Google it, the meaning of know-how. But again, if you're a commerce student and you're on this level, we all know the meaning of know-how, patent, copyright. They are intangible asset. Know-how means any formula, knowledge. That is called know-how is an intangible asset in the nature of any formula that you possess. Okay. वॉलंटरी रिसिप्ट एंड लीगैलिटी ऑफ इनकम पीजीबीपी इनकम में आता है. यस ममता यादव, पीजीबीपी इनकम में ही आएगा. अगर आपको कोई वॉलंटरी रिसिप्ट देता है लेकिन बिजनेस एक्टिविटी की वजह से देता है तो पीजीबीपी में ही आएगा. और अगर लीगैलिटी से कोई फर्क नहीं पड़ता, अगर आप कोई ऐसा बिजनेस करते हैं जो इलीगल भी है लेकिन वो एक्टिविटी बिजनेस की तरह काम होती है, तो उस केस में भी उसे बिजनेस इनकम का पार्ट माना जाए. क्लियर? नेक्स्ट इज AS20 profit and gains of business and profession help us in accounting for tax on income. AS22 that you will come to know when you will read AS22. Yes, depreciation part will help you, of course, there. Next is okay. Ved Prakash asking, gift received from business clients on wedding comes under PGBP or the other income. If anything which is connected to your business activity, then it is going to be taxable under your PGBP. So gift received on marriage won't be come under PGBP even if received from client. The treatment you will come to know under income from other sources. For time being, any gift received on marriage will be exempt. There is no taxability. Moving on to our provision. Speculative business and non-speculative business. So speculative business means those business in which we deal in any trading of any commodity without physical delivery. That is called speculative business. Explanation 2 to section 28 specifically provides that where an assessee carries on speculative business. So both are business having same kind of taxability provision. But for the purpose of PGBP, if there is any speculative business, we have to calculate its PGBP separately from other business because there is some specific provision regarding its set off of losses under section 73. If you have loss in a speculative business, you cannot set off it against a non-speculative business because section 73 of losses distinct the losses treatment. That's why we have to solve the PGBP of those business separately. So if you are having any activity of speculative business, it will be treated as a separate business and the separate calculation will be made regarding this. What is the meaning of speculative transaction? Means a transaction in which a contract for the purchase or sales of any commodity, including stocks and shares, is periodically or ultimately settled otherwise than by actual delivery or transfer of the commodity or scrips. So any business activity in which any sale purchase occurs but without the intention of physical delivery, that will be called your speculative transaction. Like intraday shares sale purchase transaction. In case of intraday sale purchase of shares, there is no intention to hold that share in your demat account. You purchased it in the morning and sold it before transferring into your demat account. So So that will be your speculative business transaction. In this topic, the provision just say that you have to calculate the PGBP of speculative business separately from non-speculative business. And why we are doing so? Not because of PGBP head. The problem is set of provision. The set of provision says that speculative business losses treatment is different in comparison to non-speculative business. So we have to differentiate, but all the applicability of provisions for PGP are same in both cases. So we just need to find out the speculative business difference between non-speculative. No calculation is different, but we just need to find out the profit from speculative business separately and non-speculative separately due to the set-off of losses chapter, because the set-off of losses concept is different for both business. There's a theoretical part, you should go through it because that's a simple theoretical provision has been mentioned. I've explained each and everything in a very simple way. You can just read it, not very important for the examination numerical, because in the examination you need to calculate the profit and calculation part. This is just the difference they are explaining in you with the help of so you can understand the whole meaning of speculative business and non-speculative. Income from trading is treated as a business income. As per Income Tax Act, business income can be either speculative business or not. So you can go through the summary part only also. If you read the summary part, that will explain each and everything in a very simple way. Speculative business, very simple meaning. I've explained it for you. As per the income tax, a contract in which the purchase or sale of any commodity, including stock and share, is settled without actual delivery is called a speculative transaction. Clear? You can read the other provision. Non-speculative, which is not speculative, will be a non-speculative business. So if any business is not a speculative business, that will be called a non-speculative business. Here's the example also for just your clarity. You can read this provision only. For summary part, you will be able to understand the meaning of speculative and the meaning of non-speculative business. So from section 28, after section 28, now we will move on to our section 29, etc. provision. That's how to calculate the expenditure. What expenditure is allowed, what expenditures are disallowed. Till now we were discussing about the income part, the credit side. That section 20 explain what kind of income will be part of our PGBP. So those 10 points. Then the speculative, non-speculative is also income. But now the main concept is started. The credit part is very easy. Generally, sale, closing stock, discount of business, etc. will form part of your credit side. So it's very easy to solve credit side of any PGBP question. The main is debit side. We have multiple provision. From now onwards till the end of this assignment, we have totally top five assignment. This is assignment number 1 of PGBP I have uploaded. We have assignment number 2, 3, 4, and 5. In rest of all the assignments, we will only discuss about the debit side concept one by one. So do not worry. These are also easy. So I guess we will discuss this provision after the break. So, Mr. Hamil, can we go for a break of 10 minutes? Mr. Hamil? Yes, yes, yes. Welcome back again, everyone. And as always says, you must have your tea, coffee, and your energy back after the break. So, okay, somebody has asked me, Devinder Singh asking, tips to waiter will be income from PGBP. How it's possible? Tips to waiter? Is he running some business? He's an employee in that restaurant or hotel, of course, and whatever tips he is receiving will be his salary income, like a bonus or incentive. It cannot be his business income. How it's possible? Next is Harsh is asking, sir, if there is any litigation or case is going on against a particular person, and if he won the case and uh, earn extra compensation for the loss damage, will it be taxable under PGBP? Listen carefully. It can be PGBP if that litigation was related to his business. If he has a litigation with his supplier, his customer, etc., and due to that customer or supplier litigation, if he is receiving that compensation, that can be his business income. But if it is a litigation with any other person, his friend, his relative, etc., in that case, it cannot be a business income. Clear? Next is Swati Pandey. What is the meaning of hedging? Kindly go on the Google and search it. Hedging means to save yourself from future risk of any kind of variation in prices. That is called hedging, to protect yourself. Exactly the meaning, the concept, you should go on the Google and understand that. In our PGP chapter, we do not need to understand the meaning of hedging. We just need to understand the meaning of speculation business and non-speculation. It says hedging contracts are not speculative business. So if you want to understand the meaning of hedging, you should go on Google and search it. You will be able to understand the meaning of hedging. I just give you an example that to protect yourself from future losses, that is called hedging contracts. Next is okay, Miss Deepika. Sir, can I get the solution for illustration 25 of salary unit? Okay. Yes, I have solved it for you. Just wait a minute. I was waiting that you are going to ask me for that. This is your salary solution. In the salary illustration number 25, the mistake you are doing is he was 71 years old. He was 7. I will upload this solution also, but you should actually you are doing what? Mr. Hari is less than 60 years of age. Like we need to calculate the area. So illustration number 25 in the year 2010-11 and 11-12. He was less than 60 years of age because in the year 2023 on 28th March 24 he was 71-year old. So if you'll find out if he was 71-year old in 2024 March, so in 10-11 and 11-12 he's less than 60 years of age. So the rate of that applicability, which is not for a citizen, we have to calculate tax for 10, 11, 11, 12 with the help of that rates. And in 12, 13, his age is more than or equal to 60 years. So here I have done the calculation also. Previous year 10, 11 tax calculation will be like this. Including area income is 813, excluding it 710. So we need to calculate tax for other resident individual will be applied from question. Like if it's 8,13,000, first 160 tax is 0. Next 340 up to 5 lakh we have to go. The tax rate is 10%, that is 34,000. The next 3 lakh rate is 20%, that is 60,000. Balance is 13,000, that is 3,900. So the tax is 97,900. If you exclude the area, the tax will be 76,000 with this slab rate. In 11-12 also, we will applicable the rate for other than senior citizen. So the tax will be 134,600. I have explained in detail. I have solved this question only for your query. And for 12-13 now, I have highlighted that is for red, that now he is a resident individual. So rate of 60 or more will be applicable in his cases. I will upload that question chart so you can download it from the portal later. Clear? Who was this? Deepika M. Okay. So more queries. Divya Kumari saying I am back. Okay, well done. Thank you so much. We all were waiting for you, Divya. Next is Mr. Rama, is a litigation with income tax department of some tax. Is it income if have taken provision of earlier tax? How it can be income? Income tax might be asking you regarding the tax. So litigation is for tax, not for any other purpose. So in that case, how can it be your income? That is on tax will be on income. There cannot be any extra income. If you're getting any interest, etc., the interest will be your income from other source. It cannot be your PGBP income. Sir, the person took 60 lakh rupees for the project of construction and he took money and not do such work. Huh? What are you saying? I'm not understanding your question, Priyanka. Okay. Okay. So now the story time, as we always uh, try to explain a motivational short story to with all of you, so you might get motivated. So after breaks, so our story time, it was a very, very short story, might help you to get motivated for your future goal, that is to be a CA. So story बहुत ही simple है, and story will be in Hindi as always it happens. एक राजा का महल था और वहां एक बहुत ही सारे प्रेशियस स्टोन्स थे, बहुत सारे रूबी, टोपाज, डायमंड्स एटसेट्रा। तो एक बहुत ही स्पेशल और प्रेशियस स्टोन था राजा के बहुत सारे स्टोन्स में, जो बहुत गंदा हो गया था, बहुत पुराने टाइम से रखा हुआ था, बहुत डर्टी था देखने में। तो उस जो राजा का महल था उसमें जो एक सर्वेंट काम करती थी, उसका बेटा वहां खेल रहा था, उसको वो स्टोन मिला, तो वो उससे खेलने लगा। बहुत ही डेलिकेट स्टोन था, बहुत ही डेलिकेट, मतलब जरा भी गिरने पर टूट सकता था, बहुत ही डेलिकेट। बट वो जो सर्वेंट का सन था वो उससे खेलता रहा, लेकिन वो नहीं टूटा, स्क्रैचेस आए गिरने से। थोड़ी देर बाद सर्वेंट के सन को लगा ये बेकार सा पत्थर है, लेट मी थ्रो इट, उसने उसे बाहर फेंक दिया। अब वो रोड पर गिर गया। अब वो सफाई वाला आया, उसने अपने सारा सामान में सफाई में उस स्टोन को अपने बैग में भरा, उसने ध्यान नहीं दिया, उसे भी लगा वो एक पत्थर है, उसने अपने बैग में भरा और अपने कचरे के साथ रख दिया, वेस्ट के साथ। फिर भी वो नहीं टूटा, स्क्रैचेस आए लेकिन टूटा नहीं। फिर उसने उसको एक जगह जाके वेस्ट को डंप कर दिया। वहां से एक जब वो शाइन कर रहा था थोड़ा सा, तो एक बर्ड आई, उसे लगा कुछ खाने की चीज है, उसने स्टोन को अपने पास लिया और कहीं पर जाकर फेंक दिया मार्केट। वो मार्केट में जमीन में गिरा रहा, पड़ा रहा, लोग चलते रहे, स्क्रैचेस आते रहे, लेकिन वो फिर भी नहीं टूटा, जबकि था बहुत डेलिकेट। देन एक सुनार, एक गोल्ड स्मिथ उस रोड से जा रहा था, उसने उस स्टोन को देखा और वो देखते ही पहचान गया कि ये बहुत प्रेशियस है। उसने उसको अपने पास उठाया, अपनी शॉप पर लेकर आया, उसे साफ किया और उसको शेप देने के लिए हल्के हल्के से तोड़ा। वो जैसे ही गोल्ड स्मिथ ने ट्राई किया, वो अपने आप जहां जहां से उसे तोड़ना चाहता था उसने उसे तोड़ लिया, और तोड़ के अपने जो बाकी बहुत सारे प्रेशियस स्टोन रखे थे वहां पर उस स्टोन को बाकी स्टोन्स के साथ रख दिया। अब जब वो स्टोन वहां पर बाकी स्टोन के साथ रखा तो वो सबसे ज्यादा शाइनिंग, सबसे वैल्यूएबल स्टोन्स था। तो बाकी सारे स्टोन्स ने पूछा कि तुम यहाँ पर कैसे आए। तो उसने अपनी पूरी स्टोरी बताई कि पहले एक सर्वेंट था, उसके बच्चे ने मेरे साथ खेला, मुझे फेंक दिया खेलकर। फिर मैं एक जो स्वीपर था वो मेरे को लेकर गया, उसने अपने कचरे के साथ मेरे को रखा। फिर एक बर्ड मुझे उठा के ले गई, उसने मुझे ऊपर से फेंका। फिर मैं रोड पे पड़ा रहा और फिर यहाँ पर आया। तो स्टोन्स ने कहा कि तुम तो बहुत डेलिकेट हो, बहुत ही ज्यादा। तो इतनी सारी जब प्रॉब्लम्स हुई तो स्क्रैच आए तुम पर, बट तुम टूटे नहीं। और जब गोल्ड स्मिथ ने एक जरा सा हिट किया शेप तुम्हारे ठीक करने के लिए, तो तुम कैसे टूट गए। तो लिसन केयरफुली, उसने क्या कहा। उसने कहा जिन लोगों ने मुझे फेंका वो मेरी वैल्यू नहीं जानते थे, तो उनके फेंकने से, उनके मुझे खराब जगह रखने से मुझे फर्क नहीं पड़ा, क्योंकि वो मेरे लेवल के ही नहीं थे, वो जानते ही नहीं थे कि मैं कौन। तो मुझे उनसे कोई फर्क नहीं पड़ा, मैं नहीं टूटा। लेकिन बिकॉज गोल्ड स्मिथ मेरी वैल्यू जानता था, तो उसने मुझे उस वैल्यू के हिसाब से वहां से कट किया जिससे मेरी वैल्यू बढ़ सकती। तो जो मुझे जानता था, जो मेरी वैल्यू को जानता था, उसकी चीज से मैं अफेक्ट होने के लिए तैयार। लेकिन जो हमें नहीं जानते हैं, जो हमारी वैल्यू नहीं जानते, उनकी बातों से हमें फर्क नहीं पड़ना चाहिए। स्क्रैचेस आ सकते हैं बट हमें टूटना नहीं चाहिए। In the same way, for your examination, for this profession, for your career, you should remember that there will be multiple people जो आपको डिस्करेज करेंगे, जो बोलेंगे आप सीए नहीं कर सकते, यू कैन नॉट बी अ चार्ट अकाउंटेंट, बहुत डिफिकल्ट होता है, दिस इज आउट ऑफ योर सिलेबस, यू कैन नॉट बी। सो आप उनकी बातों का बुरा मत मानो, क्योंकि वो आपकी वैल्यू नहीं जानते। आपको पता है, यू शुड हैव कॉन्फिडेंस इन योर सेल्फ, बिकॉज इन लोगों को तो पता ही नहीं है कि सीए क्या होता है, मैं कितना कॉन्फिडेंट हूं अपनी पढ़ाई को लेकर, मैं कितना सिंसियर हूं, उनको कुछ भी नहीं पता। दे विल जस्ट एडवाइज यू एंड ट्राई टू डिसहार्टन यू। So you should not get affected by those people. You should believe in yourself. तो लोग आएंगे आपकी जर्नी में बहुत सारे, जो आपको अलग अलग तरीके से हिट करेंगे, बहुत जोर से भी हिट करेंगे। सो यू माइट फील बैड, बट शुड नॉट ब्रोक, यू शुड हैव टू बी strong. You should know that you are valuable and you should be confident about this. And one day टाइम आएगा जब आपको आपका गोल्ड स्मिथ मिलेगा। गोल्ड स्मिथ मीन्स आपको जॉब देने वाला, वो आपको बताएगा कि आपको और कैसे खुद को ग्रूम करना है, या प्रैक्टिस में जाओगे तो वहां जो आपके साथ सेटअप आएगा वो। सो लाइक दैट स्टोन वी ऑल आर वेरी डेलिकेट, बट अगर आप दूसरों से अफेक्ट होना शुरू हो जाओगे, वो भी ऐसे लोगों से जिनको आपकी वैल्यू नहीं पता, तो आप बहुत पहले टूट जाओगे। सो बी स्ट्रॉन्ग, नॉट गेट अफेक्टेड, stay on your path, stay focused and stay motivated, and अच्छे दिन बहुत जल्दी आ जाएंगे। So that was story for today. Let's move on to our provision now. Okay. So let's get to the work now. Profit and gains of business or profession, how to compute. So now we are moving on to our expenses part. As in the starting, I have told you that a profit and loss account will be given as per accounting provision. There will be multiple income over there and will be few. Expenses will be huge in number, will be there. It will be like if 5 incomes is there, either 15 or 20 expenses, different kind of expenses will be there, and additional information will also be 90% regarding the expenses part. Because income part solving is very easy. Because technically for business purpose, we generally consider sale, closing stock, some discount, etc. if it is related to our business, bad debt recovery, etc. Generally 5, 6, 7 points, nothing more than that. Or you can learn all of this by one way, that anything which is directly, indirectly connected to business, for carrying on business or for not carrying on business, that will be part of my income side of PGBP as per income tax. So now we are moving on to this part, that what expenses allowed and disallowed as per income tax provision. Clear? So first is according to section 29, the profit and gains of any business or profession are to be computed in accordance with the provision contained in section 30 to 43D. So these are expenses provision we are going to discuss is from section 30 to 43D. It must, however, be remembered that in addition to the specific allowances and deduction from section 30 to 36, the Act further permits allowances in terms of expenses, residuary section 37(1), which extend the allowances to items of business expenditure not covered by section 30 to 36. So it is saying that we have the provision regarding expenses from section 30 to 43D. What are these sections? One by one, we will start understanding each provision separately. So section 28 was charging section, will explain which income should consider under PGBP. Now section 29 is saying that expenses will be allowed as per section 30 to 43D. So expenses section will start from section 30. 29 is just saying it. As per section 30 to 43D, expenses will be allowed. Okay. So this is computation of profit and gains from business or profession. Section 29 describes that we have section admissible deduction. Admissible means allowed deduction as per income tax. Section 30 to 37. inadmissible deduction under section 40. There are certain kind of expenditure which cannot be allowed as deduction. That will be under section 40. Then we have section 40A, that is expenses or payment not deductible under certain circumstances. Then profit chargeable to tax, some special provision of section 41 and other provision. So we'll start from section 30 to 37. First is rent, rates, tax, repairs and insurance for building. First of all, we are discussing that what can we claim as deduction in respect of building under our PGBP head. So we all know the meaning of building, of course. So if we know the meaning of building, suppose the building over here means which is used for business purpose. Which can be a factory, a showroom, a shop, a godown, etc. So if building used for business purpose, then what expenses we can claim regarding that building in our trading and profit and loss account. So if we are using a building for our business, then either will be the owner of that building. Suppose I am running a shop and I am the owner of that shop. So that shop is my building used for business and I am the owner, or it is on rent. Now suppose if I am running a shop but it is on rent and I am using that shop for my business purpose. So what a person can claim in his trading and profit and loss account debit side in respect of a building. So if I am owner, I can claim the depreciation because I am the owner, of course. I can claim the insurance. If I have done any insurance for that building, I can claim the insurance as an expenditure. Any repair, any taxes if I'm paying, etc. So in respect of a building, if I am an owner, then I might be claiming, I can claim deduction of depreciation. How depreciation will be calculated, that's a separate topic. Clear? Insurance, if I have done any insurance premium paid for that building, I can claim that. If any repairs I have done, I can claim that. If any taxes has been paid, I can claim that. If any other expenditure I have paid for that office building, that can be claimed as an expenditure. But if I am using that building as a tenant, that is on rent, then I cannot claim the depreciation, but I can claim the rent paid by me. If insurance has been done by the tenant, by me, then I can claim the insurance, of course. If any repairs of revenue nature have done by me, I can claim the repair also. If taxes has been paid by me, I can claim the taxes also. If any other expenditure done by me, then I can claim that also in my trading and profit and loss account. So clear, it's a very simple concept that in case of a building, what we can claim all the expenditure done by us. The difference is just this. If you are an owner, you cannot claim the rent, you can claim the depreciation. If you are a tenant, you can claim the rent, you cannot claim the depreciation. Either you are using a building under section 30 or 31 is for plant and machinery, furniture, etc. Same provision. Sections are different. But we will read the section 31, exactly the same concept is there, that if the plant and machinery furniture is owned by you, you can claim the depreciation, insurance, repair, taxes, whatever expenditure is done by you. If that is on rent, that machine or furniture. So we can claim the rent and insurance, repair, etc., which has been borne by you. So section 30 and 31 is too simple. I was telling you, PGBP is very, very easy. It's not a difficult topic. I don't know who is saying that it's difficult. It's very, very easy. Till now, do you feel anything difficult in respect of implication? It's just an addition, subtraction, addition, subtraction. And out of the 10 provisions, if there's suppose 10 expenditure provision, 5 we already knew. Like in case of building, what we can claim. Depreciation can be claimed by owner. Rent will be claimed by the tenant. Same in case of plant and machinery, furniture. I'm not saying that PGBP is difficult or easy. It's huge. And each individual provision is easy. But if in aggregate you have to remember all the provision, that might be a problem. But of course, individually they are not difficult like salary or house property or capital gain. So this has been written. Section 30 allows deduction in respect for the rent, rate, taxes, repairs and insurance of building used by assessee for the purpose of his business or profession, of course. You cannot claim any expenditure of any building which is for personal purpose. You cannot claim that in business, obvious. Where the premises are occupied by the assessee, the tenant, then the rent paid for such premise and the amount paid on account of cost of repair, if the assessee is taken to undertake to bear such repair. Occupation of the premises by the owner, so no rent can be claimed, but depreciation can be claimed. No notional rent would be allowed under this section. But yes, if you are running a partnership firm and a partner gives his building to the firm for use, then a certain amount of rent can be paid by the firm to that partner. That will be reasonable rent. That can be allowed a deduction in respect of that partnership firm. Repairs, if the tenant will bear the repair, he can claim the deduction. If owner take the repair, he can claim the deduction. So repair, rates of taxes, insurance, to whomsoever it may concern, who is going to pay it, can claim the deduction under his P&L, trading and P&L account. Cost of repairs and current repairs of capital nature not to be allowed as deduction, because in that case we will claim depreciation on it. If there is any capital nature repair, capital expenditure, then we cannot claim that capital expenditure as a deduction in the P&L account. We cannot claim the 100% of it. We can claim only the depreciation on it. Of course, it's a simple thing. Amount paid on account of cost of repairs to the premise occupied by the assessee as a tenant, and the amount paid on account of current repair to the premise occupied by assessee, otherwise than as a tenant, shall not include any capital expenditure. In other words, cost of repair and current repair other than capital nature allowed as deduction. Deduction means in this points are revenue expenditure. Technically, when we say deduction from section 30 till the expenditure provision will applicable, deduction means in this case is equivalent to revenue expenditure. So if it says capital nature expenditure deduction is not available, that means it says capital nature expenses will not be allowed as revenue expenditure, but we can claim depreciation on that. That's not a problem. In addition, deductions are allowed in respect of expenses. Again, it's a deduction. So deductions means revenue expenditure. This deduction does not mean chapter 6 deduction like 80C, 80DD. No, this PGBP head deductions generally means revenue expenditure. Clear? In respect of expenses by way of land, revenue, local rates, municipal taxes, to whomsoever it may concern, who will pay it can claim the deduction. Premises used partly for business and partly for other purpose. It can be possible that you have a single residential house, residence come office. So you are using half 50% for business purpose, 50% for residential purpose, or 60-40, whatever ratio. So whatever part is going to be used for business purpose, so expenses, that part can be allowed as a business expenditure. Balance will not be allowed as a business expenditure. Section 30 was this. Now section 31 is regarding same concept for plant and machinery, furniture, etc. Same. If you are an owner, you will claim depreciation, insurance, repair, maintenance, etc. If you are a tenant, you will claim rent, insurance, repair, maintenance. Section 31 allows reduction in respect of expense on current repairs and insurance of machinery, plants and furniture in computing the income from business or profession. Uses of the asset. In order to claim this deduction, the asset must have been used for the purpose of assessee's own business, the profit of which are being taxed, of course. Even if an asset is used for part of the previous year, the assessee is entitled to a deduction of the full amount of expense on repair and insurance charges, and not merely an amount proportionate to the period of use. Repair exclude replacement or reconstruction, because replacement or reconstruction will constitute a capital expenditure. So on that we will claim depreciation. Clear? Insurance premium, to whomsoever it will pay, that can claim a deduction. current repair of capital nature not to be allowed. Again, when the word says capital expenditure, that means you can claim depreciation on it. You cannot claim it's a revenue expenditure. So section 28 was regarding the income part, which income will form part of PGBP head. Clear? Section 29 says that you can claim deduction from section 30 to 43D under PGBP. Then section 30 talks about the deduction regarding buildings. Then 31 talks about the deduction regarding plant and machinery, furniture. Now section 32, in my opinion, the first important section for the purpose of practical computation or implementation is depreciation. That is section 32 now comes. So this is the first, in my opinion, the PGBP section which need to be understood because it has multiple calculation, and this depreciation concept will definitely come in the examination. When there is a PGP question, there will be depreciation implication anyhow. So before this, everything was easy. Very, very simple. Generally, theoretical part was there, like speculative business, non-speculative, charging section 28, 29, 30, 31. This is also easy, but this is the first technically, or we can say numerical part, which we were looking for under PGBP head. That is depreciation. And this is the depreciation we are going to calculate as per the income tax provision, because as per the accounting provision, depreciation will be given in the question. So we have to add back that depreciation which has been given as per accounting provision, and we have to find out the depreciation as per income tax and need to deduct that depreciation to find out the net profit as per income tax provision. So we have depreciation provision, we have additional depreciation, we have depreciation allowance, and we have terminal depreciation. So you can see that we have 4 kinds of depreciation calculation in this topic. First is depreciation. Now the good thing is I not need to explain you the meaning of depreciation. In this chapter also, only we have this kind of freedom. But under salary, first of all, I have to explain you what is the meaning of LTC. If you need to calculate the provision regarding leave travel concession, I have to explain you what is LTC. I have to explain you what is the leave encashment. I have to explain you what is the meaning of arrear. I have to explain you what is the meaning of car facility. Then we start talking about the implication. But under this is fine. Depreciation, I do not need to explain the meaning of depreciation to any of you. And please do not ask also the meaning of depreciation, because this is an expectation from you that we all know these kind of terms, because on which stage we are discussing this topic. So you should, of course, know the meanings of depreciation, etc. Yeah, what is the meaning of additional depreciation? I know this is a different topic. This you must have not heard before. So I will explain the meaning of that additional depreciation, terminal depreciation, depreciation allowance. I know what you have gone through till now regarding those points. So depreciation we know, but any term which you have not heard before, that I will explain to you. Do not worry. So depreciation, it says charge of depreciation is mandatory. Section 32 allows a deduction in respect of depreciation resulting from the diminution or exhaustion in the value of certain capital asset. The explanation 5 to this section provide that deduction on account of depreciation shall be compulsory, whether or not the assessee has claimed the deduction in computing his income. Now, what is the meaning of this word? Let me explain you. It says, suppose the value of a machine is 10 lakh rupees. Clear? Depreciation is 10%. That means 1 lakh rupees. So what we need to do in our profit and loss account as per income tax, we have to claim depreciation 1 lakh rupees before arriving at the profit. Suppose sale was 15 lakhs. So technically, if suppose only one expenditure of depreciation, suppose, or okay, fine, purchase 10 lakh, purchase and depreciation, there is only 2 expenditure. So technically, my profit will be 4 lakh. But now suppose assessee did not claim the depreciation. It's 15, purchase 10. He did not claim depreciation of 1 lakh rupees. Now net profit will be 5. You can do this. But the problem is, when the next year depreciation need to calculate it, asset value was 10 lakh, debt was 1 lakh, WDV is 9. You did not claim this debt. That's your problem. The department will reduce, deemed to have been, debt will be assumed deemed to have been allowed. So now the debt for the next year will be applicable on 9 lakh value, that will be 90,000. You cannot say that because I did not claim this 1 lakh, so kindly allow the debt upon 10 lakh. No. So depreciation is mandatory on the part of department, that if you did not claimed it, it's your choice, but we will deem to have been allowed it. So for the next year, you cannot take the benefit of depreciation which you did not claim. So if suppose in this year also you did not claim this depreciation, then for the next year the value will be 8,10,000 rupees. So this is the meaning of this word. It does not mean if you would not going to claim that depreciation, department will not allow you, but for the next year it will deem to assume that you have claimed that depreciation. So it will be a loss if you are not going to claim depreciation, because in that case your profit will be high. You need to pay tax on 5 lakh, which there should be 4 lakh. Okay. Condition to be satisfied for allowance of depreciation. The allowance of depreciation which is regulated by rule number 5 of the income tax rule 1961 is subject to the following condition which are cumulative in their application. It says the assessee in respect of which depreciation is claimed belong to either of the following categories. So first of all, the asset must be tangible or intangible asset. Obvious, it should be asset. Only then you are able to calculate the DAP upon it. So first condition to claim the depreciation is there must be a building, machinery, plant or furniture being tangible, or it may be a know-how, patent, copyright, trademark, license, franchisee, that means intangible. Clear? Second condition, the asset should be actually used by assessee for the purpose of his business during the previous year. Asset should be actually used. If you bought a machine and it's there in the factory in packing form, you did not use it in the manufacturing process, then you cannot claim the depreciation. It should have been used or put to use. The asset must be put to use at any time during the previous year. The amount of depreciation allowance is not proportionate to the period of use during the previous year. Now, why the difference between accounting depreciation and income tax depreciation? Why? There is one basic difference, one basic concept difference due to there is a difference in accounting depreciation and income tax depreciation. Under accounting, depreciation is as per number of days asset used. For example, I bought a machine for 10 lakh rupees and I used it. I bought it on from first, put to use from 1st December 2023. Then it says from 1st December till 31st March. You have to find the days and you will charge the depreciation as those number of days. If you put to use this machine on 1st July 2023, then from this till 31st March 24, you have to find the number of days and you have to find out the depreciation proportionate to that. Clear? So under accounting, this concept applicable, but under income tax, there is no proportionate number of days concept applicable for the purpose of depreciation. That's because there is always a difference between depreciation as per accounting and income tax. Under income tax, it says that there will be three rates applicable on machine or any asset. Either suppose the DAP rate was 15% in both cases. So under accounting, 15% will be applicable as per number of days used, proportionate. In this case also and in this case also. But under income tax, if the DAP rate is 15%, either DAP will be charged 0% for the year. That means no DAP for the year. In some circumstances, when it will be zero, I'm just going to explain it. Either DAP will be for full year. There is no number of days concept is there. Full year. That is mean DAP will be charged for 15%. That means full year. Or it will be half of the full rate. Half. 50% of normal rate. So there will be only three conditions on any asset under income tax. Either DAP will not be charged. Clear? Either DAP will be charged for full year. That means the rate will be applicable 15% straightforward, or DAP will be charged half. That means 7.5%. There is no proportionate number of days concept. If the machine value is 10 lakh has been given. In this case, you have to proportionately find the number of days. But if the 10 lakh rupees value is there, either the DAP will be 0, either DAP will be 1.5 lakh, either DAP will be 75,000. It does not matter the proportionate number of days concept. So that's why there will be always difference in depreciation of as per accounting and as per income tax. We do not need to find out DAP as per this because that is going to be given in question. So that DAP need to be added back into the profit, and we just need to find out depreciation as per income tax department. Now you might be thinking, when it's 0%, when it's 15%, when it's 7.5%, just relax. I am here, I will explain. Let's discuss this provision in detail. When 15, when 0, when half. Fine. So, suppose asset purchased during previous year 23-24. So this problem of 0, half or full will be only applicable on those assets. Those have been purchased during previous year 23-24. If there is any asset which is an opening WDV of block, like 20 lakh rupees is opening WDV on 1st April 23. That is going to be taxable always with full rate. If it is 15%, then 15%. There is no concept of 0, half upon opening WDV. This concept will be applicable on the asset purchased during previous year. Asset purchased and put to use during previous year. So we are discussing the provision for this, not for the opening stock. Opening WDV, sorry. So asset purchased during the previous year, there will be two cases. If asset purchased during the previous year, there will be two circumstances. First is purchased during the previous year, but not put to use in previous year. So if you purchase any asset in previous year 23-24, but you not put to use that asset in previous year 23-24. You did not put to use. You have purchased it. It has been there in the office or the factory or the godown, but you did not start put to use that asset. In that scenario, what will be the DAP rate? Suppose the DAP rate is 15%. There will be two conditions. If it is purchased but not put to use in previous year 23-24. So what will be the depreciation rate in previous year 23-24. Of course, we have discussed it. It will be nil. If asset purchased but not put to use in the previous year, there cannot be any depreciation allowed on that asset. So in previous year, there will be nil. That means 0% DAP rate will be applicable. What will be happen in subsequent year? Subsequent year, that means SY. In subsequent year, again we have to check this. Subsequent year means previous year 24-25. Clear? So in subsequent year, again if it is not put to use, again DAP will remain 0%. That means till asset is going to put to use, till asset is not going to put to use, there will be no depreciation. So even if in previous year in which it has been purchased, not put to use, no depreciation. In even subsequent year, if it is not put to use, there will be no depreciation. But what if it is put to use? If it is put to use in subsequent year, then 15%, that means full rate of depreciation can be claimed. How many days you use, it is irrelevant. But if it's put to use in next subsequent year, you can claim full rate of depreciation upon it. Full rate of depreciation. Now, this was the case when asset purchased during the previous year, but not put to use in previous year 23-24. In that scenario, we discussed that if it happens, then you cannot claim any DAP in the previous year, but in subsequent year, you can claim DAP full rate if it is put to use, but if it is not put to use, there will be no depreciation. But if asset purchased in previous year 23-24 and put to use in 23-24. Now what will happen? If it is put to use in 23-24, then again in the previous year treatment we have to see, and in subsequent year treatment we have to see. So if asset purchased in previous year and put to use also in the previous year, then there will be two situations. If it is put to use for more than equal to 180 days, if it is put to use in this previous year for more than equal to 180 days, then full rate of depreciation can be claimed. If it is put to use for less than 180 days, then DAP rate will be half. Once it's put to use in 23-24, if it is put to use in 23-24, whether it's less than or more than, then for subsequent year, it always 15% depreciation. Now for the 180 days scenario, you can learn a date, that is 4th October. This is just for your help. We have to find these days from the date of put to use till 31st of March, not before. So if in question it says that assessee purchase an asset on 1st July 23 and put to use on 25th September 23. So I have made this date for your help. If the put to use date is before 4th October 23, before 4th October 23, in this case 25 September, that means you have to calculate days from 25 September till 31st March 24. So that will be more than 180 days, because from 4th October till 31st March, days are less than 180 days. So if you see the days before 4th October, you need not to calculate days 180 days, it will waste your time. So if put to use on 25 September, it automatically means that days has been more than 180 days. If the question says put to use on 10th October 23, then it will be less than 180 days. So this date is just for your help. If it is put to use before 4th October, it will be always more than 180 days. If it is 4th October after date, then it is always less than 180 days. If it is on 4th October, then please do calculate it from 4th October till 31st of March. If it's a leap year, then please remember February will be for 29 days. So if it is in September, 1st or 2nd October, it will always more than 180. If it's after 4th October, it would be always less than 180. But if it is 4th October, then please kindly check yourself from 4th October till 31st of March, considering if there is a leap year, you have to find it yourself. Clear? Because this 23-24 is your leap year. So I hope, come on. In this case, you can see if it is not put to use in the subsequent year 0%, but if it's put to use in this subsequent year, then days are irrelevant. Only days condition is material in the previous year in which it is purchased and put to use. In the subsequent year, whether used for more than less than 1 days, it does not matter. It always 15%. This 15 or half percentage will be applicable only if the purchase year and put to use year is same. Otherwise, DAP rate will always be full rate 15%. Let's have some example regarding that, so it will be easy for you to understand. Suppose in the question it says that opening WDV is suppose 10 lakh rupees on 1st April 23. Now, asset purchase on 1st July 23, put to use, first case, 1st February 24. If the DAP rate is 10%, what will be the DAP rate applicability in this case? So you can see purchased in previous year 23-24 and put to use in the previous year 23-24. But because put to use in 1st February 24, that means less than 180 days. So DAP rate will be 5%. Suppose purchased on 1st April 23, put to use on 1st September 23. Because put to use and purchase year same. So that means if it is put to use before 4th October, that will be more than 180 days. DAP rate will be 10%. Purchased on 1st October 23, put to use, 1st April 23, put to use on 1st May 24. What will be the DAP rate in previous year 23? 0. क्योंकि put to use in previous year 24-25, because in this case 24-25 full rate, in subsequent year full rate. It is put to use not in this previous year, it is put to use in next previous year. So DAP rate will be over here only. No DAP in this year. 1st April 23, put to use on 1st November 24. Again, not put to use in this year 0, put to use in next previous year, that is in November. That means after 4th October, but it does not matter. Please read carefully this case. This is subsequent year. In subsequent year, if you put to use asset, it does not matter it less than 180, more than 180, it will always be, rate will be same, full rate of depreciation. If you can see that, in subsequent year, if you put to use, the DAP rate will be always 15%, a full rate. It does not matter less than, more than 180 days. This more than less than concept applicable only if purchase year and put to use year is same. Otherwise, DAP rate will always be full rate of depreciation. So that's why the depreciation as per accounting and income tax are different. Moving on to the provision, this is the theoretical part which has been written over here. That's why I have explained you with the help of an example. So you will be able to understand what exactly this provision want to say. Kindly go through this, the provision. I've already, okay, next point is also important. Depreciation would be allowed to the owner only, of course. If you are a tenant, you cannot claim the depreciation on that asset. This is the summary of the depreciation concept. What I have done for the important provision, the study material theoretical part which has been written over, we have discussed it with the help of example. And for all the important topic of PGBP, I have made a summary so that you will be able to understand in a simple way the provision implication part. Like depreciation summary, you can see it's very simple to understand now. Depreciation will be allowed on tangible or intangible assets which are owned wholly or partly by the assessee and used for the purpose of business. So it will allowable on tangible, intangible. That's the important thing. It should be owned by wholly or partly. This is also discussed in the above provision also. It should be used for the purpose of business or profession. It will be applicable on the WDV of the block of asset. Now, this block of asset concept has been remaining to discuss. Block of asset means we will discuss it later. First of all, point number 3. This is the theoretical part of that diagram, what we have discussed. In case of new asset purchased and not put to use in the year of purchase. So in the year of purchase, no DAP. If subsequent year not used, no DAP. If put to use, normal DAP. Normal DAP meaning full rate. This is the B part. In case of new asset purchased and put to use in the year of purchase. Then in the year of purchase, if put to use for more than equal to 180 days, normal. If it is less than 180 days, half of normal rate. In subsequent year, it is always full rate of your normal rate of depreciation allowed. Before going further, let me take the queries, and after that, I will discuss the meaning of block of asset. That is a very important thing to understand, block of asset. Ms. Neha Harge saying, true sir, my mom always demotivate me, तू कभी सीए नहीं बनेंगे. ऐसा नहीं है. पेरेंट्स अगर कभी आपको कहते भी है ना कि आप ये नहीं कर सकते, तो उनका मतलब होता है कि आपको इनकरेज करना. तो पूरी वर्ड में सिर्फ पेरेंट्स ही है, ओनली दे आर द पर्सन ना, वो कभी भी आपको कुछ ऐसा भी बोल रहे हैं डिमोटिवेट, तो उनका पर्पस ये है कि शायद आप ये सुनकर कर लो. आई ऑलवेज से टू माई डॉटर के पढ़ लो वरना तुम्हारा कुछ नहीं होगा, तुम कुछ नहीं कर पाओगे. तो जस्ट बिकॉज आई वॉन्टेड कि उसका फ्यूचर सेटल हो जाए. पेरेंट्स पे कभी डाउट नहीं करना चाहिए. उनकी जो इंटेंशन है वो तो कभी भी गलत नहीं हो सकती. इफ शी इज सेइंग दिस फॉर यू, दैट इज आल्सो फॉर योर बेनिफिट. माइट बी यू विल गेट मोटिवेटेड टू प्रूव हर दैट यस आई कैन डू दिस. मेरे पापा भी मुझको ये कहते थे, तेरा सीए कभी नहीं हो सकता, यू कैन नॉट बी अ चार्टर्ड अकाउंटेंट, because I was a very, very average student of my time. But it happened. Okay, so next is, sir, you are also a golden man for us. Thank you so much, Mr. Ajay Chauhan. Okay, okay. Very nice story. Thank you so much. Okay. Next is Swati Pandey suggesting me a story. Thank you. Till now, everything is easy. Everything is easy if you have interest in your studies. Nothing is difficult. If somebody can go to Mars and we can make a nuclear bomb, so what can be difficult than this? This is also easy. Okay. Miss Vaishali Bindal is asking, sir, in partnership, one partner received rent for building, then we claim rent or depreciation in PGBP. Partnership firm is getting that property of that partner on rent. So partnership firm cannot claim the depreciation, of course. Clear? And that person has given the asset to use for the partnership firm. So he is getting rent. So he will show that rent in his income from house property. In that income from house property, rent received from the partnership firm. So we have to calculate the GAV. And that 30% reduction will be claimed. There is no depreciation allowed to the partner because he will calculate that income under his income from house property. Firm cannot claim the depreciation because the firm is the tenant. So depreciation we do not need to consider in that case because the 30% reduction he will claim everything, depreciation, etc. That is the part of that expenditure. put to use and ready to use. Yep. If did not use also anyhow, depreciation can be done due to obsolescence. No, depreciation can be claimed under income tax if asset is put to use. If it is not put to use and obsolete, in that case, you cannot claim the depreciation. That will be the loss on the sale of that asset. That can be claimed as a loss, but cannot claim the depreciation. Very well done. Manish Kumar, allowed on goodwill purchase, no depreciation on goodwill. It is on patent, copyright has been given. There is no goodwill concept in case of depreciation under income tax. Clear? Sir, please explain again. Change of depreciation, charge of depreciation, mandatory example. It is nothing, it's very simple. If you purchase an asset of 10 lakh rupees, depreciation rate is 10%. Then you have to claim it in your P&L account, 1 lakh rupees as a depreciation. Clear? If you did not claim that 1 lakh rupees depreciation, income tax says, okay, do not claim. You need to pay tax on higher net profit. You can pay that. But for the next year WDV, that 1 lakh will be deducted from your value of the asset. So next year you can claim the DEP on 9 lakh rupees. That will be a loss for you because your WDV will be reduced. SLM method is not allowed under income tax. Under income tax, we have to apply the WDV method. We cannot claim depreciation as per SLM. So that will be the problem. Who is asking? Tushar. So because we have to apply the reducing balance method, so that if you did not claim the depreciation, the WDV of the block will be automatically reduced. Next. Srinivasan, sir, if possible, test your knowledge question 4 and 5 of house property. Okay. Please remind me that in the next class, I will definitely going to solve it for you. Let me take the picture of this query. So it will be easy for me. Okay. Next is Harsh. I must say, sir, you are a wonderful storyteller. That the way you told story is really pleasant to ears. Finding different is really not easy. Thank you. Thank you so much. Yes, you all can do that. Do not worry. Okay. In accounts also AS22 PGBP useful, yet it will help you because you understand why AS22 has been made because of this depreciation difference between accounting and income tax. There are more reason also that, but the majority reason is this depreciation because it is difference of companies act depreciation, accounting provision and income tax. That's why AS22 also come into place, and definitely you will have help if you understand the provision of depreciation as per income tax. Before closing of the class, let me just explain in 5 minutes the meaning of block of asset. That is very, very important. Under income tax, we will close this class after this topic just for 5 minutes. What is the meaning of block of asset? It's a very, very important term. Under income tax, the concept of block of asset comes. That means we will not charge depreciation on individual assets separately. No. Income tax says we will charge depreciation combined on a block of assets. Now, what is a block of asset? It says, suppose you have buildings. One is shop, godown, factory, showroom, etc. They all are buildings. And under income tax, the depreciation on these buildings is 10%. Whether it's a shop, whether it's a godown, whether it's a factory, whether it's a showroom. In case of plant and machinery, if you have machinery 1, machinery 2, machinery 3, machinery 4, machinery 5 in your factory, they have different nature of machinery. This is for production work, this is for any other work, this is for packing purpose, this is for any other purpose. So if you have different kind of machinery and the depreciation rate on all these machinery under income tax is 15%. So where accounting says that we should classify the asset as per nature-wise classification, income tax say no, we will classify the asset as per depreciation rate-wise. So suppose the shop value is 10 lakh, go down is 20 lakh, factory is 20 lakh, showroom is 20 lakh. So total value 70 lakh. In the same way, machine 1 is 5 lakh, 5 lakh, 10, 10, 15. So 45 lakh. So if this is as per accounting, then we have to calculate depreciation separately on each asset. But under income tax, it says no. It says if the depreciation rate is same. There are some machinery number 6, dep rate is 40%. There's machinery number 7, dep rate is suppose 20%. So under income tax, it says block of asset means that the asset having same rate of depreciation. Same rate of depreciation will be treated as single asset. The same rate of depreciation asset will be treated as single asset. So other asset identity will be finished. Once a block has been created, the individual identity of the asset has been finished, will cease to an end. And how the block will create as per the rates, different rates of depreciation. So because all building having the same rate of depreciation. So now we will say under income tax, how we will show this? We will say a block of asset having 10% of depreciation, the value is 70 lakh. So under income tax, the bifurcation will be now like this. For all the asset, we will show that is in our income tax for the purpose of depreciation that we are having a block of asset, 10%, the value is 70. So now that means we have one asset, 70 lakh value, dep rate is 10%. Now we will not say under income tax that is a shop, go down, factory, no. All values, all asset individual identity cease to exit under income tax if it is having the same rate of depreciation. In this case, suppose you have a car also, and under income tax, car rate is also 15%. And car is for 5 lakh value. So now this is 50 lakh. So for machine, because these all assets have same dep rate. So now you'll say we have one block of 15% dep and single value is 50 lakh. We will not say we are having 6 assets, 5 machines and 1 car. No. Income tax say once a asset comes into the block, its individual identity cease to exit. So now the dep will claim on 50 lakh rupees, forgetting about this that we have 5 assets. Now because these machines have separate rates, so we will make one more block 40%, value, suppose this asset value is 7 lakh, and block 20%, suppose this is the value is 9 lakh. So for all these assets, whatever we have, now we have 1 block, 2 block, 3 block, and 4 block. There are only 4 blocks for the purpose of depreciation will be there. So we have to calculate depreciation block wise under income tax. Listen carefully again. Under income tax, there is a block concept of asset. What is the definition of block of asset? The asset having same rate of depreciation will be treated as single asset. Once an asset comes into the block, its individual identity cease to exit. It's like in a milk, of course, if we have a milk of 20 liters and if pour some water in the milk, then the individual identity of that water is finished. In the same way, the block concept says once an asset comes into the block, its individual identity cease to exit. How we will make the block? As per the same rate of depreciation. This is the theoretical part also given in the question. This definition, kindly read this carefully. How we solved it numerically, implication, I will help you, do not worry. Block of asset means a group of asset falling having same rate of depreciation. Once an asset comes in a block, its individual identity cease to exist. individual entity cease. So we will not say that we have 5 assets of this nature, 6 assets of this nature. No, we will say we have block number 1, 10% debt, 70 lakh, block number 2, 15% debt, value is 50 lakh, and so on. So depreciation will be claimed as per block wise. That is a good news again. You need not to calculate 15 times depreciation. You just need to calculate depreciation 4 times in the example. Say 10% block separate, 15% block separate. So calculation will be easier for us. This is the block concept that we are going to discuss. The format for the depreciation, we will discuss it later. And after the depreciation concept, we will discuss additional depreciation and the question regarding it also going to be discussed in our next session, which will be day after tomorrow. So day after tomorrow, we will discuss the depreciation, then additional depreciation, and then we will discuss the MCQs part also. I will upload illustration number 25 of salary, and question 4, 5 somebody is asking. I will also solve that in next session. So please, sir, session is like for CA final 3 hours. These all are sacrifices. जैसे पुराने जमाने में साधु लोग होते थे ना, सेंट तपस्या करते थे, तपस्या क्या चाहिए, पैसा, तपस्या करो, भगवान आते थे, तथास्तु ले लो पैसा। किसी को पावर चाहिए तो क्या करनी है, तपस्या, 50 साल, 20 साल, 100 साल। किसी को भगवान बनना है तो क्या करनी है, तपस्या, क्योंकि पढ़ाई नहीं। अब वो तपस्या बन गई सी इंस्टीट्यूट का कोर्स। अब आप ये जो कर रहे हो ना, वो इक्विवेलेंट टू दैट तपस्या है। तपस्या करो, पढ़ाई करो, क्या चाहिए, पैसा, तपस्या करो, सीए बनो, पैसा। क्या चाहिए, रेपुटेशन, क्या चाहिए, पावर, सब आजकल पढ़ाई से है। तो जो पहले जमाने में तपस्या होती थी, आजकल वो सब बुक्स है, और उससे काफी आसान है पढ़ना। ओके, सो नेक्स्ट सेशन विल बी डे आफ्टर टुमारो। सो हैव अ गुड डे, जस्ट टेक केयर, कीप स्टडी, कीप फोकस। वी विल मीट डे आफ्टर टुमारो। सो हेमल जी, कैन वी क्लोज द सेशन? थैंक यू सो मच।